Just going to spend a few minutes taking you through where we finish up the market on Friday, which is technically the first trading week in the month of December. This is how we're counting down to the end of the year. The stock market was down by about 0.5%. The softening that we saw since the 1st of December. We had a big rally in November, but December is proving to be a little bit negative, even though the daily index return last week was very soft. But this is how we pile up 0.5% on Friday, losing our 27,000. But just a few, about 200 or less basis points, so we can still pull that back in the kitty before we ring the final closing bell for the year, December the 31st. So the equity cap also fell below the 13 trillion. You can see that. If you're in the market already, making money or losing it, I'm sure you know the numbers by now. Put your mouth where your money is. But if you look at the primary market indicators, and that told you that that this figure or those numbers printed showed you that the market was soft last week. We did less than 1 billion shares for a whole week. That tells you that the appetite was soft last week in terms of the market. Then you can see the rest of the primary market numbers. But where my production folks are taking me right now is the sectoral performance, the top 5 subsectors of the market. The banking sector bled 1.16%, and those guys, as you already know, hold liquidity for the marketplace. So when the banks are losing shares, as well as their cousins, the insurance stocks about almost 1%, that tells you the market is in a negative mood. Consumer goods kept it up 1.17%, as industrial goods went south 1.27%. The oil and gas about 0.43%. That's your weekly numbers. But for the oil and gas, nothing much really. On Friday, it was largely lackluster. Owando lost 1.33%. And Japol finished off 20 kobo reading on the trading board, 4.76% in the negative 33, 2.768 thousand shares traded. At the over-the-counter market, the NSI, that's the sector, the index, the NASD index was below the 700 reading. We lost that last week. And if you look at the market cap, still trying to find its way back to 500 billion before the end of the year. That's your weekly snapshot. 36 deals in total. But if you're trying to get a sense of how we finished off on Friday and getting your bearings together to start this week, the fixed income space, that's where you're looking right now at the FMDQ securities market. If we start with the bond market, that was a very big jump in terms of very active trading day for the Naira bond, 24.67 billion. That's quite big for a Friday last week. That's the 3 deals. Then you look at the treasury bills, which is NTB, Nigeria Treasury bills, 7.75, 13 transactions. That's a lot of activities flowing from the equities market to the Nigerian Treasury bills market. Again, you can see the yield curve there around 7.3% on average for most actively traded NTBs. Then you go to the open market operations, which is OMO, with the maturities on Thursday. The open market operations was also still very active at the secondary window. That's 116.36 billion. 175 transactions. That's quite a lot, if you ask me, there for a single trading day. But the discount, or what's called the yield curve, is still consistent with what we saw the previous week. So we're wrapping up the year 2019. I think it's time for us to begin to talk about the leaders and the laggards for the year. And this is part of what Financial Derivatives Company pushed out in terms of some graphic illustration, giving us a sense of where the market and the economy and the impact they had on each other since we started the year after the elections. Technically speaking, let's bring in Nadida Yobakari, who is an investment research analyst at AfroInvest. He's giving us the playbook and the forecast for the year 2019, and if all had gone the way they thought things would go on the equity side. That's what this conversation is all about, from the trading floor of the Nigerian Stock Exchange. Adedayo, hope you had a very nice weekend. Let's have a few minutes together. Good morning.
Good morning, Bosun.
Great to have you. So what's your playbook when we were starting the new year? How hopeful or excited were you folks at AfroInvest, starting the new year?
Okay, so obviously we're not quite optimistic about the year, and one of the reasons we went was we know about the elections. So the elections held very early in the year, and we were quite unsure on what to expect, given that the political environment was always heated. But looking forward into the year to paint a better picture of what our expectations were, what we actually did was to create different scenarios of how we think developments could evolve in 2019. And so we had a bear scenario, which had features such as if the elections didn't go as planned, or you had post-election violence. We had also monetary policy in terms of when the conduct of monetary policy affects not only market sentiment, but also investor sentiment. We also had a bit of expectations on the economy. So we actually forecasted that if the economy was slower than expected as well, that could feature in our bear scenario. Overall, what we expected for our bear scenario was the market could go as low as 33% down. Now, moving on to the other scenario we created, which was the base case. The base case was more or less assuming that everything continues as it is. So we assumed that the elections was going to be peaceful. There was not going to be any post-election violence. The conduct of monetary policy is going to be supportive of the investment environment. We also expected then normalization in advanced economies, also the pace to remain at current levels. And for our base case scenario, our expectation was that the market could gain as much as 40% if most of the conditions we had anticipated held. Now, for the optimistic scenario, which we were really, really bullish on, was if we had new listings of companies in the market, which we had during the year. MTN listed in March, and we also saw Airtel listing in June. Also, we expected reforms in terms of oil and gas reforms, in terms of power sector reforms, to really support players in that market to attract investment and to drive economic activity in those markets. But we didn't see that come to pass in 2019. We also expected a favorable monetary policy environment, which will continue to encourage investors to look into the Nigerian market. And so far, with all the policy dictates we've seen this year too, we didn't see that. So for us, we think what has really been closer to what we expected during the year, given all the monetary policy issues that came on board during the year, and when you look at the political environment, how the elections were a bit heated in some parts of the country, and the INEC later had to conduct elections for some states and from positions as well. And when you also think in terms of the investment environment, how fiscal policy has not done really well. The budget was not passed on time. Implementation has really been slow. Growth expectations too. Early in the year, we were expecting 2.5% growth, but I mean, we all know what we've done this year. The first quarter, we had a very marked slowdown coming from Q4 2018. Second quarter, we saw a 2.1% growth, and in the third quarter, we saw a 2.3% growth. So put together, we believe what we've seen this year in terms of the scenarios we created at AfroInvest, it's closer to the bear scenario, given the policy inconsistencies and the very, very weak investment environment.
Very interesting. We're going to be putting up on the screen. I'm not sure if you can see that over there. The banking sector recorded the highest gain in November, and when we talk about the market, the banking sector always comes first. So far this year, has the banking sector met your projections, your forecast, your outlook for the year at AfroInvest? Adedayo.
Not exactly. For tier one names in particular, we've seen improved relatively steady performance. Coming into the year, we knew, there was going to be a low yield environment, especially post-elections. I mean, going into the elections to continue to attract investors, CBN had, continued to tighten, and interest rates were very, very high. And, when, rates are high in the economy, then it supports the banking business. But what we've seen post-elections was that the yield environment moderated strongly, and that affected banks in terms of when you think in terms of their interest income. Also, we see we are projected, a bit of an uptick in loan growth due to low yield environment. Banks will want to continue to maintain margins. As such, they could expand their loan book. Early in the year, that's the first half of the year, especially for tier 1 banks, we really didn't see a lot of credit growth. But post H1 2019, due to the recent policy of the central bank that has encouraged banks to lend, and also the 60% minimum loan to deposit ratio, which was later increased to 65%, we've seen an improvement in terms of credit creation by banks. So overall, for tier 1 banks, we believe it's been consistent with expectations, but all kinds of headwinds, which we had not anticipated in terms of the restrictions that has been placed on the banking business during the year by the CBN, has been one of the factors that actually affected market performance in terms of Nigerian banks. So in terms of fundamentals, Access Bank, GT Bank, Zenith, UBA, even FBN Holdings have done quite well during the year. But in terms of the performance in the market, that has not really mirrored fundamentals, and we believe that is due to the weak investor sentiment in the market.
These are the two of the largest telecommunications companies in Nigeria, and you talk about that in your opening comment. Adedayo Bakari, MTN and Airtel, put that back on the screen. Put that on the screen, you see the chart there. If you look at the level at which the expectations were a year, 2 years, 3 years, all the chasing of MTN and Airtel by stock exchange, by SEC, by market operators for listing, and here they come this year. And what's your take so far with this? It looks like if you look at the pricing and what have you, it hasn't really lifted the market, as it were. It looks like the entire euphoria were not really met with what actually happened. That's the first chart, by the way.
Yeah, absolutely. It's it was a good development anyway for the market, because Airtel is a very large company. MTN Nigeria too is is massive, and when you think in terms of the fundamental drivers of the telecoms market in Nigeria, we've continued to see growing mobile penetration. We've continued to see growing internal penetration. Also in terms of infrastructure, a lot of the telecommunications companies continue to invest in infrastructure to really drive digital participation in the Nigerian economy and to derive the attendant benefits. Now going into the broader telecommunications sector, the performance over the past 1 year has actually been spectacular. So the ICT sector has been, being the major driver of growth. The sector has been growing at double digits when you compare to agric, which is at maybe 2 to 3%. When you look at manufacturing, which is under 1% in some quarters. When you look at the services sector, the broader service sector, which has actually been very, very poor. The ICT sector has been fantastic. And when you look at the earnings of MTN, when you look at the earnings of even Airtel, the two publicly listed companies in the sector, you've seen continuous growth across the board. So when you think in terms of voice revenues, it's growing. When you think in terms of digital revenues, that is growing as well. And when you think in terms of infrastructure investment, that is also growing. And also most of the mobile money businesses of these firms, they continue to invest in mobile money, and we've seen increased adoption. So when you think in terms of the fundamentals of the market and the fundamentals of this sector, then you think where was the mismatch during the year? Because upon listing, we've not seen a very, very strong performance, especially for Airtel. For MTN, due to pricing, we saw modest gains in the first 2 weeks of listing, and that actually supported market performance. So market performance this year, the overall market performance is, the market is down 14.6% year to date as of Friday. But if you strip out, the performance of MTN, you see that market performance has actually been worse than we've actually been able to see. So it's going to be around over 20% into the negative region. So what we believe has been the major cause of this underwhelming performance by the telecommunications majors is, number one, the regulatory environment. In terms of, when you think in terms of MTN, late last year, they had an issue with the CBN related to certificate of capital importation. They also had an issue with the Attorney General Office, which is yet to be resolved. Why the CBN issue has been resolved, for Attorney General, that has been unresolved, and really that's affected the pricing of the company and also, investor sentiment and perception of the company. So in terms of regulation in that market, in the ICT sector, it's not been very, very supportive. Also, when you think in terms of the broader economy, in terms of attracting investment in the economy, fiscal policy, monetary policy has not been good enough. And so the general investor sentiment in the market, which is very, very weak, which we've seen in banking, we've seen in insurance, we've seen in consumer goods, also played out in the ICT sector. So for the ICT sector, the fundamentals remain sound. The sector is a major driver of growth in the economy. However, what we've seen during the year is regulatory challenges has really been the major driver of the underwhelming performance, as well as the weak investor environment in Nigeria.
Consumer goods traditionally do well in this economy, and under consumer goods, you have those who are breweries and what have you. So if you put all of them together, food, beverages, all under consumer goods, this year, this is one of the worst, if not the worst performing subsector of the market, down nearly 30%, even worse than the broader all-share index. Why?
Absolutely. For the consumer goods sector, it's been a long time coming. If we go back to the recession we had in 2016, that was really when a lot of Nigerian consumers have been bearing a very, very harsh conditions. So in terms of, when you think in terms of growth has been weak. The Nigerian economy is over 60% of GDP is driven by the consumption sector. And in a situation where, growth continues to be weak, although improving, then you think in terms of hiring, that is employment, when you think in terms of also wage growth, you see that in terms of the momentum in those two places, we've seen the momentum has been very, very weak. So what we've been seeing in the consumer goods sector, in terms of the firms in that sector, is actually mirrors what we've seen in the broader economy, which is very, very weak performance. And now for the consumer goods sector too, apart from the challenges we've attributed to the broader economy, we've also seen a situation where regulation has come even more strongly to the fore. So in breweries, for instance, we've seen increase in taxes, excise duties have been increased for the sector, and that has affected a lot of the major players in the brewery segment, from international breweries to Nigerian breweries to Guinness. They've not been doing very, very well, and this is one of the major reasons why the performance of the sector in the NSC has been actually terrible. When you think in terms of a personal care segment to PZ, Unilever, they've not been doing spectacularly well too, and we believe it's because consumers are still very, very challenged. And when consumers are challenged, they tend to look for alternatives, and that is what we've seen for most of the year. Nestle has really been one of the bright spots in that segment, which has been able to continue to maintain growth. However, growth is also weak for Nestle, but they've done relatively very well compared to the rest of the market. So we believe it's a mix of the regulatory environment in terms of new taxes coming and also the weak growth we've seen.
Adedayo Bakari, thank you so much from Afrinverse. You've printed a very nice picture. Well, the market hadn't really been nice, but at least the picture is nice in terms of the data. Facts, figures don't lie, unless you lie with the figures. So thank you so much for giving us that overview of the market for the year so far. Next time we're touching base, we're talking about future outlook. Thank you so much, Eda Bakari, investment analyst from Afrinvest. That's your playbook for the year. Let's get back, everyone. All the talk about Brexit and December 12 elections, the British Chamber of Commerce believes that the UK economy will grow 1% next year. And what are the facts behind the figures? I'm asking Juliana Olayenka from our London studios when we come back.